Welcome to another accounting session where we're going to look at accounting, finance, and investment in the stock market. By the end of this session, you'll be able to have a better understanding of the principles needed to invest in the stock market. We will be able to appraise a company's product life cycle. We're going to look at connecting the concept of Maslow hierarchy of needs and a company's earning potential. We're also going to look at the stock value and the accounting equation and income, growth areas, declining sectors, maturity sectors, information held by investors, public and the company, risky investment and good investment. Now here we look at the product life cycle. In terms of the introduction and the introductory stage, companies tend to invest significantly, so therefore there's not a lot of profits, which means that the likelihood of dividend is low to non-existent. As it moves into growth, the likelihood of dividend is now increased, and therefore there's opportunity to get some return. When it gets to maturity, there's a lot of cash in the company, and therefore the opportunity for dividends is quite significant. As it gets into decline, profit falls, and therefore the likelihood of dividends is not necessarily high. And if they do pay dividend, they may also suffer a loss, though, because they have a lot of cash. But the negative is that the share price is more likely going to fall, and so therefore if you're a long-term investor, you're likely to lose some value from your share purchase. Now I'd like to appraise these companies. We have zero in the various sections. So in terms of induction, I would say these two companies, and this is my recommendation, Xero Accounting Software and Metro Bank. They are the two companies I would say in the introductory section. Metro Bank in the UK, they've basically come to the UK a few years now. They had a bit of financial challenge, but they're better now. And Xero Accounting Software, they have been building a lot of steam, and they're getting a lot of press and would have good prospects moving into the growth section. Now, companies that are settled in the growth section, I would say, is Amazon and Facebook. Amazon has been having high turnover due to their business model at the moment, and there's huge growth prospect for them because as their fame grows and the demand for online services grows, it will go well for Amazon. In terms of Facebook, now Facebook is very good in terms of growth. It has a lot of people on its software. It has nearly 1 billion people, and so therefore it has a huge market, and so there's a lot of prospects there. And in terms of investing to get a return, I would say it is a good investment. In terms of maturity, Apple is at that mature level. iPhone is given them a lot of profit over the years, but right now I would say it's declining. There's a decline. Microsoft has been around for a while, but it is in the maturity section because it doesn't really have a competitor, but so it's settled in maturity, and there's a lot of cash. And in terms of the investment, you're more likely to get a good dividend because they don't need to prove a lot because they've been around for quite a while. And in terms of decline, we would say Sony and Nissan. Sony because there's a huge decline in the various sectors that this business operates in, and even though they have huge cash turnover, their profitability is quite low. They give good dividend, but then you might get a yield, but it then also will wipe out your share value. So you get a good dividend, but then the share value will fall, which means that you make money in one way, but then you lose in another. So I wouldn't say for the long-term prospects that would be good. If you want to do a short yield, maybe, but not for long-term because it's declining. Now, Nissan, I would say Nissan is declining due to the fact that they just lost their CEO. So it's in a declining sector. So I would say until they solve the management issue, it will be a big problem. Now, we can also look at Maslow hierarchy of needs. Here we have needs in categories. First, we have the psychological needs, we have the safety needs, we have the love and belonging, self-esteem, and self-actualization. Now, in terms of physiological needs, that's basic needs that all human beings need, which is food, shelter, and clothing. And if a company operates in that particular sector, it's more likely to have a long life, because you're always going to need food, you're always going to need clothes, and you're always going to need shelter. So companies in that particular sector is more likely to be good long-term investment, but their margins are low, and so you have to take that into account. In terms of safety, with the terrorist attacks and the various disasters going on around the world, the need for safety has increased, and so therefore in terms of growth prospects is quite good, but there's a lot of capital intensive requirements for this particular sector, so therefore you're more likely going to have challenges with getting dividend. Love and belonging, companies that operate in this particular sector, deals with marriages and babies, etc. In the Western areas, they're more likely to have a decline in birth rates, and marriages, well, high marriages, because there's divorces and all of that. But mainly, I would say companies in this particular sector, there's good margins, because people who are at this particular level of their life, they tend to have good disposable. And then we look at self-esteem. So companies at this particular sector would target people with, say, making 100,000, 50, 60, 70,000, which means they have reasonable disposable. And then companies in the self-actualized sector is luxury. So we're looking at the Gucci's and companies of those levels that where the margins are quite high. So let's look at some examples. So physiological needs, I would say Tesco and Walmart. Tesco, it's in food, and Walmart is also in food, but they have low margins, so not very good for dividend. In terms of security, I would say G4S and ADT. Again, good prospects because of the unsafe environment in which we are at the moment, but you also need to be mindful of the capital intensive nature of it, and therefore they're not likely to give dividend you would want. Companies into love and belonging needs would be, I would say, Tiffany and Canon. Again, they would have good margins, and so therefore you're more likely to get a good dividend. Companies that go self-esteem, it's more on the first layer of luxury. Again, they tend to have high capital intensive nature, and so therefore, but their margins are very high, and so therefore the possibility of getting dividend, when you do get dividend, would be significant. And then we have self-actualization, is Gucci and Ferrari. These are companies that are luxury. The margins are quite high, and also if you get dividend, your dividend would more likely to be quite significant. Now we can look at the accounting equation and income. Now we know the accounting equation is asset is equal to liabilities plus capital, and so therefore we have a net income. I would consider here in terms of Sony, we would say their net income is about 8 million, and the statement was between yen and US dollars, so slightly a bit confusing, but the yield I could see here is $6 over 70, so the share price is about $70, and it's $6 for dividend, and so therefore there's a yield of 9.5. So I think that's a good yield. But look at Amazon, their share price is about $2,000, but their dividend is $20, so it's just about 1%. So a significant share price, and a very small return. But the growth prospect will allow this share price to appreciate. So you'll get a return on the appreciation of the share value, but not a lot of dividend. Now, in terms of growth areas, I would say the technology sector is a growth area. It has been growing for a long time. Well, in recent times, it's quite significant, especially in the West, because the West is now moving away from the traditional manufacturing sector, and so therefore technology is driving the West's wealth. The declining sector, as I said before, British Steel in manufacturing, these sectors tend to be declining. If you invest, you're more likely to get a loss, and so therefore, you have to be very prudent in that regard. In terms of financial services, I would say banks would be in the mature sector. In this, banks and financial services, is in the maturity sector, and in terms of dividends, you would get a good dividend. If you were to invest, I would say you're more likely to get a good dividend there. You just need to be mindful of the risk in terms of financial bad investment the banks may do. But other than that, it's a good investment. Now, it is important to note when investing that who has the information. Now, we have three categories of information. We have expert information, we have the public information, and we have information held by the company. Now, the expert information would be companies like Bloomberg. They would analyze the markets, and they specialize in looking at the financial reports of various companies and appraising or declining, or providing the realities of what is happening in the particular company. While on the contrary, the public relies solely on news and written report, and not all public personnel will have information about the stock market and have a good understanding, and so therefore knowledge is quite low. And then we have information that's held within the company. Now, information that's held within the company is a bit hard to get, and sometimes it comes after a financial report has been given. And if